So we are closing out 2012, heading into the last month. I'm here with Mark Newton from Grey Wolf Technologies. And Mark, you think that December is shaping up to be a good month. Tell me why.
Well, you're starting to see increasing signs of stabilization in a lot of these indices, and the markets have rallied up for the last 8 of the last 10 days, and really the last 4 of the 6 months have been positive. And so, you know, despite the fact that we've got no real clear-cut answer with regards to this fiscal cliff, I mean, the markets seem to be trading in a way that they anticipate at least some type of short-term solution, and that maybe the bigger issue gets put off until next year. And so at least with regards to how I see things, I mean, technically the markets have improved. Technology has started to trade better. That's a big positive. The dollar is starting to turn down versus a lot of the major currencies, particularly today against the euro and sterling. But the DXY being below 80 is certainly a technical positive with regards to seeing commodities start to bounce and trade better as well. And so as you see these signs of global stabilization with improvement in PMI around the world with regards to China and Europe, the markets are starting to go into, slowly but surely, a risk-on mode for December, which traditionally has been the best month of the year seasonally, statistically going back since 1950, best month for the S&P and the second best for the Dow. And so my thinking is that any bigger pullback probably is put off until next year. Technically, the markets have made sufficient progress just in the last couple weeks, with the S&P getting above 14, 10, 11, which on the futures was a bigger area of trend line resistance going back since mid-September. The NASDAQ has improved also. So there's still a lot of issues weighing on people, but we only have a few weeks left in the year, and my thinking is that we're still going to make some upper progress and probably get back to the highs, I think, by the end of the year.
All right, so it sounds like we've got a Santa Claus rally intact, although it's not a high trajectory on that rally, maybe just, adding a little bit every day.
Right, I mean, we've moved a long way in a short period of time, so we could easily back and fill a little bit over the next week, potentially. The S&P up near 1425 is important for futures, and I'd add that the S&P, if you look at the Dow Jones Stock 600 overseas and Europe, the European indices have moved up to prior highs. So things are a little bit short-term overbought, but in general, you look at daily and weekly charts, we're not really that overdone, and we could easily afford to move up. So I think the general trajectory will be higher for December, and it might not move in a straight line, but with regards to seeing these sectors like industrials, energy, last month was all consumer staples and discretionary were the best sectors, performance-wise. So as we see these risk-on sectors start to move up, and the defensive sectors start to sell off. Utilities in particular today is the worst performing sector, the only sector right now that's negative, and I expect that we'll see a pullback back down to former lows in relative terms. As we start, as investors and managers get out of the defensive sectors and into the risk on heading into year end.
All right, well, you got to be in this market to win it, so don't be so scared of that cliff that you're not in this market. That's Mark Newton from Grey Wolf, and I'm Deborah Borchardt with The Street.